Hello everyone, we are live and welcome to Peaks Money Talk here in the studio today with Lloyd and with Nathan. And today, as you know, every episode we always talk about something to do with your investments. Today's topic is going to be ETFs. ETFs, of course, are exchange traded funds. Thanks again for joining us on today's show. We are talking about exchange traded funds, and you know what, full disclosure, I'm only the host here, and that's why we have Lloyd and Nathan here, because I don't know much, if anything, about exchange traded funds, or maybe I know about it, but I don't know that I know about it. So for anybody watching, including myself and listening in right now, what is an exchange traded fund?
Well, an exchange traded fund is very similar to a mutual fund that we had mentioned on a previous show.
Okay.
It's a basket of stocks, but the only difference is it's traded over the stock exchange. Hence, that's why they call it an exchange traded mutual fund, right? So those are the biggest things. Other than that, it's very similar. It's a basket of stocks and bonds, depending on the style of investing you want to do, whether be very conservative or very risky. You have all those types of things.
Okay, so because I put all of my faith in my financial advisor, maybe I even have that and I don't even know I have that. I don't know. Okay, so what are the benefits of doing that over a mutual fund, having an exchange traded fund? What's the difference?
Probably the biggest benefit, I would say, over a mutual fund is the fees. People, fees are a big part of investing now. People are a little worried, think that they might be paying too much for the outcome or the return that they're getting. So ETFs are a similar product. In an exchange traded fund, you don't have a fund manager managing those stocks within it. What happens is the institution puts the stocks in it, and they usually mimic an index, and that's probably maybe where, if you've ever heard of an index fund, is they usually mimic the index which represents that stock market in that country, and they just mimic it. So there's no managing, because the index, there's stocks don't usually go in and out of that. They usually keep the one set of stocks, and that is what it is. Okay,
so that's where you get your percentage savings then, obviously, with no management.
Yes, so you have the no management fee on that.
The other advantage is it's sold live.
Oh, okay, like that's the stock market daily then. Okay.
Yeah. So if you got in touch with us advisors, you could have it sold at 1:30, where mutual funds are sold at the end of the trading day.
Okay.
So everything's sold live, so that if you want to, I want to sell it, Friday night, you can sell it right then, live.
Yeah, and you know the exact price you're getting it at. Where end of day, you have to sell it, but you won't know until the end of the day what price you're going to get. Even though you sold the mutual fund, you call in and say, I need some money out of a mutual fund at, say, 9:30 in the morning, you won't know the price until the next day on a mutual fund. Where an ETF, as long as you trade within 9:30 to 4,
what you sell it at is what you get it at.
Exactly.
Okay, so that's a big difference.
Right.
And that's where, when people are watching, if someone's very well educated in the stock exchange, is that what it means when they're like day traders and they're watching and they're trading? Or
day traders can use them, but we don't recommend day trading
that's
because
very aggressive, right? Like it's pretty...
And you're having to market time, which is very difficult to do. And but yeah, that would be one of the big advantages, though, is you can trade throughout the day.
And that's where relying on a financial advisor helps, because obviously this is what you do each and every day, and it's not what I do in each and every day, which is why I put my trust into a financial advisor.
Right.
Well,
so, along with those fees too, if you invest in a mutual fund for 30 years and you invest in an ETF for 30 years, you've saved yourself 30%, because you've saved yourself usually, at least depending on the ETF that you get, but you can usually save up to 1%.
Wow.
So that's 30% over 30 years that you've saved.
So is that the biggest difference between an ETF and a mutual fund then?
It is, usually.
And the biggest advantage, I guess, too.
Right.
The reason that mutual funds are charging what they do is they say they're actively managed, and they say that ETFs are passively managed, which means that nobody's looking over them. Now, who knows? That's what everybody says. So that's why they say that they're worth more. A mutual fund.
Okay, so in terms of exchange traded funds, then, are there different types of funds that we need to be looking at? Just to clarify for people, different types of exchange traded funds?
Yeah, so very similar to mutual funds. You have, especially in the passive, you've got all your countries that you can invest in. You've got bonds that you can invest in, or you can have a combination of both, depending on your risk allocation that you would like. Yeah, that's pretty much an advantage, I guess, if you want to put it that way. So.
Okay, so anything else we should add? I just want to, just one more time, just the biggest difference between a mutual fund and an exchange traded fund. If you can summarize that one more time, because I mean, there's a lot to learn here.
Yeah, I guess the key points are you don't have a fund manager. The other thing is the fees. I think between those two, when people are really conscious of fees, I think it's a great avenue to go because, like I said, over 30 years, you can save yourself quite a bit of percent by going that route over a mutual fund. Now, you'll never outperform, that's where some people in a mutual fund, you might get outperformance because you got a manager that hopefully does better than what the market does, where an ETF, a passive ETF, you're going to get what the market gives you.
Okay.
But you're guaranteed to get the market. So
the other thing with ETFs is taxes are paid right at the time because they're bought and sold. And,
right.
So you pay the taxes, whether it be capital gains or dividends that come in, they're paid off right at the time. So
you sell right at the time in real time, and you pay anything.
No.
Well, you only pay tax on the gains when you sell.
Okay,
That's the only where mutual funds you could have capital gains or distribution fees that they say, even though you don't sell the mutual fund. Where an ETF, you don't get any of that unless you sell the ETF. So it's a lot more manageable tax strategy to use.
Okay.
Because you can control when you pay tax.
Okay, good knowledge, good information here. Anything else we should add?
the other thing that's happening is, whether it be North America or all throughout the world, it's gotten inundated with a lot more people are buying ETFs. In that it's a situation where in the last 3 years it's likely doubled in what has happened just in Canada in people that have had ETFs. So it's really grown. It's went from about 90 billion to pushing 200 billion now. So it has made a lot of inroads. So a lot of people are using them now, and I want people to be aware that if they haven't used them, to look at them and see if it fits into your investment criteria and knowledge.
And that's where I would be talking with your financial advisor and seeing if that fits into your portfolio as well.
Yeah.
Interesting. Okay, we always have interesting conversation here at Peaks Money Talk. Thank you for joining us and tuning in. If you have any questions, of course, we want you to, definitely click the like on our page or subscribe so that you don't miss an episode of Peaks Money Talk. And if you do have a question, please do enter it in there below, because we will answer your questions, or I won't answer them. They'll answer the questions, Lloyd or Nathan. They're the ones, as I said, I'm just the host. They're the ones that know all of these details and have all the knowledge and the know-how here, and they will help answer your questions for you. Thanks for watching. We'll see you next week on another episode of Peaks Money Talk.